Good evening, traders, and welcome to BCI's Evening Market Outlook. Starting with the US dollar, in 2025, markets reacted more to sentiment than data, especially President Trump's trade stance and pressure on the Fed. This triggered an 11% drop in the DXY in the first half of the year, which is the sharpest drop since 1972. Looking ahead to 2026, structural forces take the lead. The Fed's 3.25% rate floor is mostly priced in, but falling hedging costs are drawing institutions back into US dollar hedges. The Danish pension fund, for example, increased its hedge ratio from 62% to 72%, which is still below its long-term norm near 80%. This trend may limit any strong dollar rebound in the short term. Onto oil, the outlook remains soft. Supply growth from OPEC and non-OPEC producers is expected roughly at 1.4 to 1.5 million barrels per day against demand growth of just 700,000 barrels. Non-OECD demand rises, but OECD contraction, electrification, and efficiency weigh on consumption. We hold a 2026 Brent forecast near $55 with downside risk unless OPEC cuts deeper. Gold remains the standout. 2025 brought historic strength and the widest volatility since 1980. Central bank accumulation, healthy ETF flows, and tight supply support further gains. Our 2026 forecast sits near 44.50 with a range of 39.50 to 49.50, supported by structural demand, even with volatility coming ahead. That's all for today's evening market outlook. As always, manage your risk and happy trading.